right, well, what I'm watching, no doubt, has to be oil. So rebounding today after falling below $54 a barrel and sitting at a one-year low. Joining us now from the CME in Chicago is Bob Iaccino, Path Trading Partners Chief Market Strategist. Bob, what are you doing with oil today?
Alex, you love that crude oil, don't you? I'm looking for it to rally back. It's been quite oversold, but this is not a long position to take. You go back to the first and second quarter, we went from being undersupplied about 10,000 barrels a day to being oversupplied by the second quarter by about 30,000 barrels a day. It's looking like it's going to be closer to 60,000 barrels for the completed numbers of Q3. So we can get back up to 60 simply because price action does that, but it's likely to be a sale even in light of the rumors about the production cut that may come out of the OPEC meeting December 6th, because if Saudi Arabia is not on board with the physical cuts, you can get that rebound, but that will be sold as the actual numbers filter to the market.
And talk about how you interpret the tweets from President Trump. I mean, yesterday he was speaking to the press and basically said, look, if we broke Saudi Arabia, oil prices would go through the roof, so we can't do that. Then this morning he tweeted, you should be happy. We were at $83 just a few weeks ago. Now we're at 53. Is there any way you can make a case to be an oil bull when President Trump doesn't want to be?
Well, I think, again, it has to, had this Khashoggi situation not happened, I think we'd still be up at least around 65. There's seasonal factors that got priced out as well. But it's a point taken not just with the Saudi Arabia situation, that when you look at the exemptions for the countries given in the Iranian sanctions, the 8 countries given exemptions, 7 of those 8 are in the top 10 exporters of Iranian crude. So they had already placed orders such as South Korea, India, with other oil suppliers, and now they find out they can take Iranian crude as well. That's excess crude on the market. Then China's increased their inventories by about 416%, potentially in anticipation of sanctions getting worse if they don't get worse. That's excess supply that comes out of China, doesn't get bought by China,
right,
and gets put back into the market. So it's very difficult to be a medium-term bull in crude oil.
And the other thing you have to adjust to now is oil volatility. So what's the trade that you're going to take on?
Well, for me, I'm going to sell put spreads near in the money. I'm not going to go into outright crude oil. I want to take advantage of this high volatility, thinking that it's going to at least stabilize simply because of how high it got. But I certainly wouldn't take any outright longs. If I were going to go long, it would be in call spreads when the volatility's kind of calmed down a little bit.
All right, Bob Iaccino, Path Trading Partners, thanks very much. Great to get your perspective.
Thank you.
Happy Thanksgiving.